Welcome to Global Money Talk, brought to you by SamProTV. Greetings to all of our viewers from across the United States, Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blair, and joining me today for our market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, good morning, and thank you so much for joining me.
Good morning. It's actually a little bit of a chilly morning this morning.
It is.
I think it was 55 degrees when I walked out of the house. I'm glad I actually had the jacket.
Well, it is getting cooler here in the New York City area, and now when I wake up in the morning, it's pitch black and it is dark. So, we know daylight savings is right around the corner, but that also means a lot of event risk, right, with the election coming up in November. But before that, what are we celebrating today?
Oh, so a couple of important ones. It's Leaf Ericson Bay. And if some of our watchers will remember, back in elementary school, we learned that Leif Erikson actually arrived in the North American continent somewhere around the year 1000 and 500 years before Columbus, and is credited for being the first European. He was born in Iceland and was from Norway to really set foot in the North American continent for a long time. And secondly, and for our watchers in Korea, is, and I hope I say this right, is Hangul Day, which is the day that commemorates the creation of the Korean alphabet, which I think is from the mid-15th century.
So a lot to keep our eyes on today, in addition to celebrating those two events. And it's really interesting because Columbus Day is right around the corner, isn't it?
Yes, it is, next Monday. But we'll be here.
Yes, indeed. We won't have a holiday for that day because U.S. markets will be open. But in terms of what we're keeping our eyes on this week, it's been quite the roller coaster of a week because U.S. equities closed down on Monday, they soared yesterday, and here we opened lower, but we're back up again. So shall we start out with the market check this morning? Well, let's take a look at the Dow Jones Industrial Average this morning. We are seeing that index higher and up by over 100 points. Meanwhile, the NASDAQ Composite Index has turned higher as well after a lower open and is up by 0.36%. And the S&P 500 right now is higher, and we are seeing that index up by nearly 0.4%. But we have a lot to keep our eyes on this morning ahead of inflation figures Thursday morning as well as Friday morning. We get the Fed minutes out later this afternoon, and we've been hearing from a lot of Fed speakers, but it'll be interesting to see those minutes.
Yeah, the minutes that just give a little bit of more, fill in the background about what they were thinking when they were doing the 50 basis point move. We've had a lot of Fed speakers, as you mentioned, so that's not as much of a mystery, but nevertheless, it's still going to be parsed by by the market to see if there are any clues, and also what the staff economists think. I mean, it's a fairly long document, the minutes, and people will definitely look at that. One of the things that we saw this morning, actually, before we get to the Fed, was mortgage rates. Yes. And the mortgage rates come out every week. And today, the 30-year mortgage rate, I think, was up at 6.36, up from 6.14 just a week ago. So 22 basis points from a week ago, and it's the first rise since July the 3rd. So let's take a look at that for our viewers. Let's look at graphic 1. So these are where the mortgage rates are, and I always like to take a step back so we get a little perspective. The chart on the left is a 5-year chart, and the one on the right is about it goes back 30 odd years, and you can see that it's ticked up just a little bit. Hasn't been able to go above 6, and from a high of nearly 8 early, I think late last year, maybe in the November, December time. So, and if you look at 2021, 22, and the back end of the pandemic was only 3%. So a long way to go before we see those types of mortgage rates again, and I'm not sure we will, because I think the neutral rate, as Danielle DiMartino-Booth mentioned yesterday in our show, she thinks the neutral rate is going to end up somewhere with a 2 on it. So I think maybe 4 or 5 is the most that we're going to get in terms of mortgage rates, somewhere on the 4s perhaps. And then on the right-hand side, you can see how much rates came down and then spiked back up. And let's quickly look at graphic number 2, and it's also on mortgages. So here's the average house price and mortgage size, and these are both 5-year charts. So the average house price in the U.S. is something in the range of about $500,000, and the mortgages are about $390,000. Again, giving you an idea of the housing prices have been off the highs of mid 2023, but still quite elevated over time. And mortgage sizes have drifted a little bit lower. And in terms of, just to give people an idea, if you have a $400,000 mortgage, so just using an average here, $400,000 mortgage, the difference in 100 basis points, so 636 instead of 536, is $250 a month. So that, for an Americans like to get as much house as they possibly can. Those numbers sort of make a difference at some stage. If interest rates are 200 basis points lower and mortgage rates are concomitantly so, $500 difference payment a month, you can buy a lot more house.
Yeah, you bring up an important point there, because when we look at the charts, so whether we're talking about mortgage rates or the average home price in the U.S., we've seen significant swings pre-pandemic, during the pandemic, and in the current environment as well. And when we're looking at lowered interest rates, it takes a while for that to work itself through the system and start affecting rates, correct?
That's right. That's right. And sort of rates, go down on an escalator, go up in an elevator, and I mean there is competition, so those rates will, will come down. And if you think about it, mortgages on the, on a sort of around a 6% handle. If you can hedge them properly with the treasuries, that's actually is decent business. And of course you get all the fees, and then when sort of refinancing, you also have to pay a lot of fees too. So banks in some ways are sort of happy to do that. They're not happy giving up the higher rate mortgages, but a lot of those have been sort of securitized and sold to a lot of other investors, so it's no longer on their books. So actually, the holders of those bonds are the ones who are unhappy. The banks will just, bring in the business.
And for viewers who are perhaps outside of the U.S. and they're not so familiar with how borrowing works here in the U.S. or even refinancing, can you walk us through this? I know we've talked about the differences between variable versus fixed year mortgages and the rates involved. So tell us how this works.
So primarily in the United States, and it's different in the U.S. than in many other countries, especially I think Canada and the U.K. come to mind. If they're fixed, most of the mortgages are fixed rates. So you take a rate, and that's your rate for the next 30 years. And the great thing is you can refinance pretty much any time. So if rates drop, you can say, oh, rates drop 200 basis points. I can save $500 a month. How much are the fees? Oh, $3,000 at one time. Well, that's only 6 months of, 6 months of payments that I have to make up. So I'm happy to pay $3,000 or whatever it happens to be. Could be more if you have a jumbo-sized mortgage. You save a lot of money ongoing. And to hedge that, that's why the mortgage bond business here, the asset bond business here is so big. Whereas in other countries, I don't think the mortgages are actually much shorter. They're not 30-year bonds, 30-year residential mortgages, and some people use 15 if they want to pay off quickly. Other countries are sort of 5-year mortgages, and the rates adjust to whatever the market interest rate is. So the dynamic's very different, but it makes the U.S., I think, a better place to buy homes. And buying a home is if the homes go. I mean, certainly buying a home is expensive in terms of maintenance and property taxes, but it's a great lifestyle. And if property prices go up over time, buying a home at the right time can be a big wealth builder. And I think that's really what the United States has done that fairly well. You get fewer and fewer people buying houses now, for a number of demographic reasons. Having fewer children is a big part of it, but that's why the U.S. mortgage market is a little bit different than everybody else's.
Yeah, I think it's important to make that distinction, and as you mentioned, mortgage systems in terms of the rates, fixed versus variable, that can make quite a difference depending on where you are in the world. So.
Right. And you can get low adjustable rate mortgages, but know that there's an element of risk in there. They can go up. They can typically only go up 2% a year, but if you did an arm when rates were, you thought at the highs and they went up further, that can be actually quite painful. You can probably refinance those, but rates will be higher, so you really can't. You'll be stuck with higher rates until rates sort of come down. So that's the arms are good. Sometimes people buy a lot of house using adjustable rate mortgages because the rates are lower than the fixed rate mortgages. But you take the risk that they can go up, and you can't really refinance because market rates are so high when you want to refinance.
And speaking of risk, we are watching several stories this morning.
Yes.
Of course, Hurricane Milton, which is about to make landfall in Florida later on today. We are watching that storm. And in addition to that, we're keeping our eyes on Google as well as the Department of Justice. So let's start out by looking at where Google is this morning and why we're seeing shares lower.
So I think Google's down about 1% or so, and the big news, we talked about Google yesterday, and a federal judge required them to do certain things, but this one is sort of bigger. The Department of Justice has told another federal judge that oversaw an antitrust case that Google lost, that the remedies that they're looking for could be a breakup of Google to separate maybe their search or make them sell off pieces of their search business, opening up their search algorithms to competitors. So essentially Google, and depending on, there was a very, very long article I was trying to read it on the subway, that they control in some ways maybe 80-90% of the markets, and that's a little too much. So I love tech. I think tech is one of the big drivers of growth in this country. But do we need tech this big, where you have companies like perhaps like an Amazon or Facebook or Meta or Google that really dominate the landscape so they can lock everybody out? Or we better with sort of a lot more smaller tech companies that can't, say, control access, control the news, control the narrative. And I think a lot of people after 2020 are a little more concerned about that, because famously the New York Post, which I think is the third largest circulation in the country, was essentially shut out from running the Hunter Biden laptop story, which turned out to be true, but the big services actually shut them down. But back to Google, it's going to, it makes for a great headline. Shares are getting sold off, but they're going to litigate this for years. And they can't even appeal it yet because the judge hasn't come out with what he wants to be the remedy. So it's sort of, you can't appeal it until there is something to appeal. And Google will spend tens, if not hundreds of millions of dollars litigating this. Now, Google is litigating against the European Union, which has been, sort of very, very anti. There's the chart on Google. Down a bit today. I don't expect to collapse because even though they're fighting battles on many fronts, it's going to take years, and they're going to have the best and the brightest in terms of the legal eagles on their side. But I think it will be a continuing issue because they are actually so dominant.
Yeah, and when we look at the Mag 7 names this week, we've seen a lot of volatility for Google as well as the other Mag 7 names. And when we think about Alphabet as a company, or even Google, the name Google is not just a noun, but it's also become a verb. So when we're talking about whether or not they have a monopoly on web search, that should give you an indication, at least to begin with.
It's interesting you should mention this. I was reading an article earlier this week, and they said the companies that took like Pets.com or whatever that ended up not doing very well because the name wasn't sort of that interesting. And they said it wasn't really because of the name, it actually reflected on the thinking of the founders, right? Google, what is a Google? The only Google that I know, and it's spelled differently, is I think a 1 followed by 100 zeros after it is the number of Google. I can't remember the number of zeros actually. Yahoo was very successful for a very long time. Amazon, or where did that come from, right? So I think the article said that it speaks to the mentality of the founders. If they had something that was a little offbeat and strange, but becomes part of the vernacular, like you FedEx things, can you Xerox that copy of us? And eventually, Xerox, struggled a lot and is a shadow of its former self. But it goes, the name shows the imagination of the founders, which is really interesting.
Yeah, and another name that I just thought of, because you mentioned Xerox, right? Back in the day when we used to photocopy or scan things, we used to call that Xeroxing. But Kleenex, right? Instead of tissue.
Exactly. Very powerful, and I guess it shows the powerful thinking behind the product of their service.
Yes, and smart branding as well.
Yes, certainly.
And as we take a look at global markets, I do want to shift our focus on over to China. So the Chinese stock market took quite a tumble, and apparently we're supposed to get another presser this weekend on Saturday. So what's going on there?
So the CSI 300, which is their benchmark, fell 7% today, and now closed below where it closed before they went on holiday. The Hang Seng was down 1.5%, and similarly has now closed below where it was on the close the 30th of September. So what does this tell us? It tells us that the market is it's still much higher than where we started, but they're a little disappointed. And now we have an announcement of a Saturday morning press conference.
That's very interesting timing.
Yes, and I think in the Asian countries, certainly my mother would tell me that they actually used to go to school in the morning, on Saturday morning. So that was pre-war, and I mean Second World War. My mother had me when she was a little bit older. Saturday mornings are often a work day in Asia, so it's an interesting time for them to have this press conference. And you'd like to think that they better have some sort of interesting thing for the markets. Some of the American banks are thinking 2 or 3 trillion yuan worth of stimulus that they need to announce, and that may or may not be enough. But you better hope that it better be something like 2 trillion, or the market is going to correct even further. I'm not going into this weekend short because I don't know what's going to come out. But over the next couple of days, if we get more of a retracement in the Chinese markets, FXI is something that I put on a small position. If we get a retracement further, I'm going to add a little bit to it, because I think the risk is they do announce something substantial and it opens up 10% higher, on Monday morning, and you never get a chance to get in. I think you'll have a chance to probably get out. You might take a little bit of a lump, but I'd rather buy on a dip here than certainly be short or sell out my long and not get a chance to get back in. Whether or not they can fix the economy, they've certainly given, I think, a charge to the financial market. So I'm looking for a chance to maybe sneak in a little bit if we get a little bit lower here. So don't be short. Certainly. Yeah,
and the timing of this is very interesting as well, because as you mentioned, Saturday morning, it'll be Friday evening here, East Coast, West Coast of the U.S. I'm sure we'll be keeping our eyes peeled in terms of what comes out of this. But even earlier this week, as China came back from their holiday, we were waiting to hear from them, but we got a disappointment because we didn't get any announcement in terms of the measures pre-holiday.
Right. And the one good thing about announcing things on a weekend is the market gets to digest it, think about it. There aren't so many sort of knee-jerk moves or panic moves. You actually sit and get to, sort of think about that. So you wonder, should the Federal Reserve meet on Friday and announce on Saturday and let the market digest? Surely, I just jest because I don't think the Fed wants, a lot of people in the Fed wants to work on Saturdays other than perhaps the governors and the presidents themselves.
Yeah, that's interesting you mentioned that as well, because do you think we'll see some reaction over in the crypto market, given that we see 24/7?
That's the only one that's open. You're right. You're absolutely right.
Yeah, because when we think back to the summer when we had a lot of market-moving events in terms of politics, we saw the crypto market react immediately. What comes to mind is the Butler, Pennsylvania rally back in July and the attempted assassination at President Trump as well. So.
Right. And that's where you can trade all the ETFs on the on the exchanges now, but they're not open on the weekend. So you've got to keep your little Coinbase account or wherever account you happen to use. But in terms of risk, we should actually quickly touch on the Middle East.
Yes, absolutely.
Crude has come back down, Brent and WTI, over the last couple of days after Brent, I think, nearly touched 80. I think the market's long and a little bit sort of bored waiting for the Israelis to retaliate. And there seems to be, I think, reading the undertone of it, furious discussion between the Americans and the Israelis. They want the Israelis, well, not too many, too many bad things didn't happen to you. Not only one person died. Don't hit the oil fields. Don't hit the nuclear sites. And yesterday, the defense minister was supposed to come here and visit with Lloyd Austin, our Secretary of Defense, and that trip was canceled at the last minute by Prime Minister Netanyahu, leading to some speculation that they want to finalize plans for a strike on Iran. We don't know what it's going to be, but the market certainly is long and says, maybe it's not as, if the Americans can apply pressure to the Israelis, not that it's been successful recently, then, we don't, we'll get a concentrated strike on a military facility and we don't broaden the conflict, which is what, sort of, I guess, maybe the world and world hopes for and the markets hope for, except for maybe the bullish oil traders. So that's something to keep an eye on.
Yeah, and as you mentioned, in New York morning trade, we are seeing crude oil, Brent crude futures both down about 1% today, and that is a significant pullback from the highs we saw in the previous session. Yeah,
we've been up, I think, depending on WTI was 5 days in a row before the last 2 days. Brent was probably 6 or 7 sessions in a row before the last 2 days. I think we may steady here a little bit because the Israelis will answer. It's just how they answer.
And that is one area of the world we'll keep our eyes on given the tensions in the Middle East. I do want to shift our focus since today is Wednesday and we did get the EIA figures in terms of inventory. So according to the Energy Information Administration, U.S. crude stocks are higher, and this comes as refining activity slipped last week, and we also saw inventories for gasoline and distillates lower.
So this is a little bit of a mixed report. Inventories, certainly crude, the stocks are higher, but distillates are kind of smartly lower, and gasoline, I think a little bit lower. I'm just trying to see it here. It doesn't look like it's really impacted the markets very dramatically. I think people have the position they probably want at this stage, and it's now a little bit of a waiting game. I actually want to get back to, and I missed it. You talked about the Fed, and we'll look at their minutes a little bit later today. But Adriana Kugler, who is a new governor of the Fed, and who's Danielle talked about this yesterday. We don't know very much about her. And she gave actually quite a long speech on global inflation yesterday, which I won't get quite into because that's a very, very long speech. But she made a couple of points that I thought were very, very interesting. And it goes to some of the things that Ken Fisher has talked about when he's been on the show and on the interview. And she had 2 points. She says, U.S. businesses, the United States had more business start over the past few years than 70 within the last 2 years and than in any other country. So some business might fail, but we start many more business here than in other countries. And in part, it's sort of those animal spirits. We have a great idea. Let's start a business. Some of those fall by the wayside, some of those go along, but some of those end up being really, really big businesses that actually employ a fair number of people. The other thing she said was also very interesting. It was a very data-heavy presentation. Is that in terms of the immigrants to this country, after 2 years, and this is about 2020, so it might be a little bit dated, but over 70% of the migrants to this country have a job after 2 years. Compare it to, say, Germany or the UK, I think you're talking about maybe like 30% of migrants actually have a job. And that says a few things. One is that immigrants sort of assimilate in the economy much faster, and also that we have a much more sort of flexible economy. One of the reasons why sort of our economy and our markets are still sort of the envy of the world, though you wish that we certainly wish that we do some things better here, that our political situation was a little less polarized, but nevertheless, sort of capitalism finds a way, and as long as the government doesn't mess around with too much, and one of the couple reasons why that this is such a strong economic system.
And Tai, you're speaking about two key issues here: small businesses, entrepreneurialism, the ability to start businesses to boost the economy here in the U.S., and of course immigration. With less than 30 days until the presidential election, November 5th, I think these are two issues we'll keep our eyes on.
Certainly will.
Thank you so much for joining me, Tai.
Thank you.
And coming up next, I will be joined by Richard Bayless, partner at Karani Asset Management. Don't go away, we'll be right back.